if you repay,
Yeah.
if you repay and you get approved for the voluntary disclosure program, then you do not have to amend your income tax returns to reduce your wage expense,
Okay.
even though you're only repaying 85% of the ERC that you received. The only exception is that if you've already filed amended income tax returns to reduce your wage expense, you should, and you do qualify for the voluntary disclosure program, then you should re-amend your taxes.
Re-amend your amended taxes?
Yep, to put those wage expenses back in, which for most people will result in a reduction of their tax liability.
Federal government doing the same job 3 times.
Right? But I mean, the good news is the 15% that you get to keep is not taxable as income. So that's good. And when you voluntarily disclose that you should not have gotten the ERC, you aren't going to be charged penalties or interest if you pay the 85% in full.
Okay.
And you can,
How many people are going to be able to do that truly?
there's, we do a bunch of reviews for other accounting professionals when they have a client that got ERC, didn't know that they got ERC, and they just, or they didn't know that, because a lot of the payroll software companies were, you could click a button and it was totally accidental. We fixed a lot of these early on where they clicked the button and they got ERC, and they're like, we don't qualify. And it was a lot of smart people that were doing it too. So, and I had somebody walk me through, because they did see it in another quarter, and this was still when ERC was a live program, not now. It's all after the fact, but it was super easy. The payroll software asked you a question. If you answered it yes, you got ERC. That was like the only qualification that a lot of the payroll softwares were doing when they were sending the ERC through.
So, and I'm sorry to keep asking certain questions because I don't want to extend it too long, but are you talking about basically that within the payroll, if they click the button, that they were like initially you could defer certain types of taxes, you could defer different things. Are you saying that it changed the calculations and that's how they were getting money out of it? That didn't automatically make them submit and file to get
It
money
it
back.
it did automatically fill out the 941 to claim the ERC on the original return.
Okay. I was gone. Now I didn't even realize that. So.
Yeah. There's some forms that you have to fill out when you're applying for the voluntary disclosure program. Form 2750 allows the IRS extended time to assess penalties on the employment returns or the income tax returns. That is a not negotiable requirement that you have to fill this out as part of your voluntary disclosure program packet.
Makes sense.
So who can qualify? You can't already be under criminal investigation. You received ERC, but believe you're entitled to $0. And that you did not already apply for ERC voluntary disclosure program for the same periods when it was open until March of this year, because the IRS is still processing applications from the first program. And this is one of the many examples in this presentation that's hurry up and wait. They announced the program during the height of tax season and gave a March 22nd deadline. And they of the ERC Voluntary Disclosure Program applications they've received, I don't even think they processed half of them.
Yeah.
And there wasn't that many to begin with. But any business 501c3 or other tax exempt organization, government entity
Mhm.
are eligible to apply.
Okay. So the one thing I wanted to add here is if you're watching this and either you got money or you have clients that did, if they, for some reason, if you had any kind of weird feeling like the process of going through getting ERC funds was pushy at any time and just felt weird, take a second look is what this may be the time that make sure everything is above board. And if you need to do this, it can be done. And that's, shameless plug for you, Shannon. That's where payroll restoration comes into play if there's a question or concern. So,
Yeah. Yeah. And that is something that we're doing a lot of. We actually only have room in our schedule to do 16 more before the 16 more reviews before the voluntary disclosure program cutoff,
okay.
because we only
They take time.
realistically, they take a lot of time. And we realistically we won't start one in November because we won't have enough time to really thoroughly vet it and make sure that the numbers and everything all match up. And the last thing we want to do is rush through one of these.
So what's this letter 6577C?
It's a ERC recapture
Okay.
or demand for repayment for all or part of the ERC claim. That just means that the IRS has already determined that this was not a claim that was valid. You can't be under audit for the employment returns for the tax period that you're applying for the voluntary disclosure program. And you can't have already filed an amended tax return to back out of the ERC claim.
Okay.
And I have never filed more amended 941Xs for a second or third time than I have in the last 18 months.
It's insane.
It
Yeah.
is. But I mean, when you're backing out an ERC claim, you just switch the numbers around from the corrected amount to the previously reported amount. And because when you're doing an ERC claim, if you're backing the entire thing out, the previously reported will become the corrected on the new amended return, and the previously reported will be the
Yeah. We'll let them call you for this part of it.
basically it'll be zero.
Yeah.
And if you need training on it, we do offer that as well.
Perfect.
If you've already determined that a claim isn't valid, they might have already received a recapture letter, or they may already be under audit.
So maybe a good question to ask here before you go to the next slide is, like, when you're coming into these later in the picture, are there ways to find out if a letter 6577C has already been sent to double check as like part of your process before you do it?
It should show up on the transcript,
There we go. Okay.
but it doesn't always.
Because I can just imagine it's really easy for us, hat-wearing business owners to miss certain emails and mail and such. So, okay.
And everything the IRS sends is going to come by US mail.
point.
It's not going to be emailed. They're not going to call you. They don't want iTunes gift cards either. And
They prefer Amazon anyways. Anyways, okay. Who can apply? So what else we got here? The IRS hasn't received any information from a third party or directly from an enforcement action that the taxpayer is not in compliance. Got it. Okay. Ooh, PEOs. What was this other? Didn't apply using a third-party payer to claim the ERC on their behalf. The employer will not be eligible to apply for the Voluntary Disclosure Program. Only the third-party payer can apply. So PEOs is example, right? You want to explain that?
Yeah, so professional employer organizations are PEOs. There's if if a business owner worked ran their payroll through a PEO or a CPEO, then they're not filing their 941 using their EIN. They're filing using the PEO's EIN. And
Yeah.
we at the beginning, if somebody said, "Oh, I've got a PEO," we wouldn't touch it. We wouldn't talk to them. We would not do anything. But then I started working with a few of the PEO companies, and they're like, as long as we get this information, we'll file the claim
Yeah.
because we can back it up if there's ever an audit or a question. But PEO employers were totally at the mercy of if the PEO wanted to file the claim or not.
Well, basically, in a sense, it's like they own the employees, right? So the payroll, you still have the payroll totals, everything else on yours, but in a sense, the employees are all through their payroll ID number. So therefore, it was kind of their decision on that stuff. So with the PEO stuff, folks, you'll know if you need to be worried about this. You'll know if you're in a PEO for sure.
Yeah, you will. And when because I have seen the paperwork when a PEO applies because I've worked really closely with a couple,
Yeah.
and the there's it looks like a graph that it basically is a 941 without it being a 941, where it's like it lists off the EINs and then you've got all the wages and the ERC and everything on there.